The main differences between FZROX and VTI lie in their platform, expense ratio, minimum investment, and tradability. FZROX is exclusive to its own platform, whereas VTI is offered on multiple investment apps and websites, making it more flexible and easier to purchase. In terms of expense ratio, FZROX charges none, while VTI charges 0.02%, which translates to a $3 annual fee for every $10,000 invested, making FZROX more accessible to investors. However, VTI has a minimum investment requirement of at least one share, whereas FZROX has no such requirement, allowing investors to invest any amount. Additionally, VTI is an ETF that offers investors the flexibility to trade throughout the day, responding to market changes, and is free to trade with many brokers and custodians. In contrast, FZROX is a mutual fund priced only once at the end of the trading day, with limited transaction flexibility, while FZROX has no transaction fees on its own platform. It incurs fees when traded through other brokers and custodians. On the other hand, VTI can be traded for free on almost all platforms. It's also worth noting that FZROX typically makes capital gain distributions, whereas VTI does not, making VTI more tax efficient for investors. Despite these differences, both funds are comprehensive indices that accurately reflect the U.S. stock market's performance. Ultimately, the choice between FZROX and VTI depends on the investor's priorities. FZROX is a low-cost mutual fund with no expense ratio, but its inflexibility and tax inefficiency are notable drawbacks. In contrast, VTI offers flexibility, tax efficiency, and convenience, albeit with a slightly higher expense ratio. Overall, VTI is considered a more attractive option due to its tax efficiency, flexibility, and convenience. The information compared is accurate as of the current time and is subject